What's going on, gang? It's Billy here from Storm Trades. Trade review, trade recap. Let's do it. You know how we do this at this point. If you've been watching, and I really appreciate it if you do, we're gonna go through my super simple process of establishing the daily bias. How I do it. You may do it different. You may read or see how to do it way different than I do it. I can't stress this enough. You have to find what works for you. This is what works for me. If you get anything out of it, frankly, maybe it'll help you establish what you want to do. Okay. A lot of times I see what I don't like and end up figuring out what I do from that. Right. Okay. So I establish my daily bias very simply. I want to do it within a minute to 2 minutes max. I mean, if I'm having a look there at the daily chart and I don't know what's going on within 1 minute, then it's clear that that price action is not clear to me on the high time frame chart, and I'm neutral. Okay, so I want things to jump out of me: internal range liquidity, external range liquidity. I define those for internal as a bullish or bearish daily fair value gap, and external range liquidity would be swing highs, daily swing highs, and I also want to include in there like relatively equal highs on the daily. I think those are really good liquidity levels and liquidity pools. So I'm already going a little too long on this. Let's jump right in. We're on the daily chart here. That's what you're looking at. And every time I'm on the daily chart, I am practically doing the exact same thing every single morning. And I'm putting everything inside of the Unicorn University Discord, where I have a personal page and I upload all of my analysis and my where I think price is going for the day, my trades, and it's a great community, to be honest with you. So anyway, first things first, let's put the previous daily high. Let's mark the previous daily high, previous daily low. Let's run a fib. I always run a fib from the previous daily candle, okay? And just want to see where we currently are as I'm starting my analysis, right? So it's clear to me we've had quite a move here overnight, right? We swept previous daily low. We were headed higher. But that, to me, is not enough to establish a daily bias. I'm looking for internal and external range liquidity and where price is delivering from, okay? So, in fact, price is still delivering from a bearish daily fair value gap here, okay? So we short from daily bearish fair value gaps. And then we try and look at price action and see if that narrative makes sense. And then once we hop on the hourly time frame, we're really going to dig into market structure. Okay, so we're currently inside of a bearish daily fair value gap, and we also have recently swept a swing high on the daily, right? So we also short at swing highs. Okay, we short at daily swing highs. We short inside bearish daily fair value gaps, and so now I'm starting to get a narrative, and this is all happening very quickly as we're doing it right here. Okay. I also want to make note that down here, okay, so we're in internal range liquidity right now, and price will tend to move from internal to external, right? So I just want to mark out, it's very far down here, but that's our next relevant swing low on the daily down there. So here's the swing high inside the internal range liquidity, and eventually, okay, I'd like to see price draw this way. It doesn't need to go all the way down here. I just need to try and understand where I think where the candle's gonna go for the day, right? All right. That said, we also had a liquidity raid here. So, you know, yesterday's candle was very bearish after sweeping the previous daily candle inside of the bearish daily fair value gap and sweeping the swing high. So I'm super bearish here, right? And that's just going to mark that out here. Had I just gone based upon the candle that is currently forming, I may have been framing a bullish day. But I want to just quickly put all of those things together, make my decision. I don't need to be right. This is a bearish day for me. And now I'm moving on to the hourly time frame. So let me pull that up right here. On the hourly, I'm also looking for changes in the state of delivery that make complete sense. After we've maybe swept some, for instance, a daily swing high here, and I want to justify those or confirm those changes in state of delivery with displacement. And we will always have a fair value gap where we get displacement, right? It's sort of like the definition of displacement is price being offered only on one side of the market. So right away, I can see here that after we took the swing high, right, we crashed back down through here. We made displacement, and we created a bearish hourly fair value gap up here. So once I get to the hourly time frame, I'm doing the vast majority of my analysis on here, and I need some sort of a sweep of external range liquidity on the hourly, or a move into a bear, in this particular case, a bearish hourly fair value gap, right? So where we are currently on the candle, and this is here at the 8 o'clock hourly candle, I don't have any reason to go into my M5 execution time frame, but I'm understanding the narrative as I'm looking at it right now, and I'm saying, well, I think prices should go lower. We have a change in the state of delivery here. I want to run a fib from the swing high to the swing low here, and just see if I can line up any liquidity with some levels that have not been taken yet, right? So we have a -1 to -1.5 here. That's the lowest hanging fruit. We're pretty far away from that. So I just want to make note that we have some high time frame drawn liquidity right here. And I'm already done with my analysis on the hourly. The only thing that I will mark in Unicorn University on my analysis page is for my trade setup, or my trade plan, is where the invalidation level would be, right? So this hourly bearish fair value gap, if we were to inverse that, I would expect us to come up and take the previous daily high and go higher. So I'm marking that out as my invalidation. If that doesn't happen, I'm expecting price to go low. So it's like an if-then statement, right, that I'm making prior to going into the market and looking to take trades. I want to have a game plan. I'm looking for lower prices. It makes sense to me. The narrative, if you just kind of zoom out here, right, we've got a range. We just breached the range. We came back down into it with displacement. I would now be looking for a little retracement up here, and then a move down lower, at least down to this high time frame drawing liquidity I've marked out. All right, so let's move price forward. And on the very next hourly candle, okay, we have moved up into this bearish hourly fair value gap. I now, at this point, I am now moving to the M5, and I'm starting to look for a reversal pattern. All right, so let's go ahead and drop onto the M5. And when I'm on my M5 execution time frame, I am requiring two things. I'm requiring a sweep of some sort of a swing high within the M5 time frame, and preferably that sweep would be inside of the hourly POI that I'm looking to deliver from. So in this particular case, I'm just watching price to see if we can get some sort of a swing sweep, right? So I'm looking for a sweep of a high here, and we're just following price. And we're following price, and this is part of trading that is boring, right? So you understand what you want to do. I understand what I want to do here, and I need a couple things to play out. Just because the bearish on the hourly, bearish on the daily, doesn't mean I would just jump in right here. At this point, I need some sort of a sweep in order to, as part of my model, in order to get interested in a trade. So we're watching price here. We're still watching price, and at this point right here, we have just gotten our sweep inside of the M5 time frame, and we are still inside of the bearish hourly fair value gap right here. All right. So now I'm following price, and I'm trying to establish a change in the state of delivery. Okay. So if we were to close below these series of up close candles that took the liquidity, that would be a change in the state of delivery. Preferably, I'd like to see that with some sort of displacement. And I also want to mark out here that these series of down close candles, okay, prior to the move up that took liquidity, if we were to close through that, that would be a breaker. And if we did that with a fair value gap in the middle, would be a unicorn. Now I'm watching price, and I'm watching price and we got the displacement. All right. Now, do you jump in right here? I like front running, but not all the way down here, right? The risk reward profile is not there. So in this particular case, I'm requiring a move back up into the change in state delivery, into the breaker. And at this point, this is going to set up as a unicorn, right? So we're watching price. At this point, I'm looking for price to come back up and tag the change in the state delivery. At this point, we've just established that this is now a unicorn, which is a fair value gap inside of a breaker. All right, so watching price and getting close. And on this very next candle, we had a tag of the change in the state of delivery. We also tagged into the breaker. And let's see here. I put on a trade right here with my stop at this swing high. And what you'll notice is we got an opportunity. So a lot of people will just set it and forget it, maybe even take your eyes off of it. Just say, hey, look, this is the trade and I don't want to watch it. But the thing about watching the trade is if you get a chance to watch it, you may have an opportunity to pyramid in. And on this particular trade, we did have that. And I'll show you. Now, why did I choose this swing low here? Well, it's the most obvious swing low. And we have a bullish 5-minute fair value gap here that also lines right up with it. Okay. So I don't want to try and bite off more than I can chew. Just because I want to get 2R, I can get 2R different ways. Okay. And this particular move right here would be down to this minor sell side liquidity that's 1.7R. That's great. Okay. But as you'll see, we'll get a chance to up that to almost 2R by pyramiding in. So I'm going to mark the sell contract here, stop above the swing high, and the original take profit right here at the minor sell side liquidity. Now you'll see what I'm talking about here in terms of following price and seeing if there's something that makes sense to get on sides with a continuation of the same move I'm in a pyramid entry. So what I would need for that is some sort of a sweep, which I get right there. Okay. This is a sweep. Now, I will mark out a series of up-close candles that took that. And if we close below that, that gives me an opportunity to get in with another contract. And at that point, I would expect this breaker to hold, and I would bring my my risk all the way down to there. Okay. So let's see here. And we're not through it yet, but on this very next candle, we closed strong below this order block. And at that time, I took my risk down to the top of the breaker, okay, and I sold one more contract. Now, what that's done is I still have the same draw on liquidity, but I've been able to increase my R from 1.7 to 1.96 roughly, okay? So let's play price out here, and we got a pretty fast delivery. It was a great trade. Just goes to show you it's important to follow price once you've engaged the POI. And this was a really fun trade. It delivered pretty quick, and it made sense. And we had the high time frame alignment, daily, hourly, and then on the execution. All right, guys, if you got anything out of this, I really appreciate a like or a subscribe. I appreciate everyone that's commenting on this. It really helps me to go through my trading model. It may get repetitive, but that's sort of by design, and I really appreciate it if you would like or subscribe this, and you guys have a great day.